Well, we've had plenty of tariff talk, even this morning, coming from U.S. Treasury Secretary Scott Bessent. So with the risky backdrop, Tony Sycamore from IG joins me now. Tony, welcome. Yeah, it's very much risk off right now, isn't it? Wobbles out there.
That is. There's a lot of reasons for it. I mean, there is certainly uncertainty out of there because of the tariffs and the trade policy, which the new administration is pushing. But more importantly, and potentially a result of what we just mentioned, is that we're seeing some signs of real retrenchment in the consumer sector there. We saw a very soft retail sales number a couple of weeks ago. University of Michigan consumer sentiment was weak. Then overnight, we saw the Conference Board's Consumer Sentiment Index fall by the largest amount since September 2021. And on top of that, we've had the biggest retailer in the US, Walmart, talking about the fact that it is a very challenging environment. So putting that all together and the fact that the US consumer accounts for 70% of GDP, they're very concerned. They're wary, they're cautious, they're keeping their wallet in the back pocket. So that's also playing a role, and it's permeating through Wall Street in terms of the tech stocks are also wobbling. We're concerned about the expenditure for AI, the scope for cuts after some announced this week. But it's really been a situation where the NASDAQ pushed to a marginal new high this time last week. It couldn't maintain it. In fact, by the end of the week, it had closed back below its previous range, a range it had been in for 8 weeks. And now we're trading towards the bottom of that range, both in the NASDAQ and the S&P, which are heavily influenced by tech stocks. So for me, I think the NASDAQ does have further to go in terms of potentially trading down towards that 200-day moving average and the uptrend support, which goes all the way back until December 2022. And that comes in around 20,000-ish. So I'm looking for further declines for the NASDAQ. Has had a rather sharp move down over the past 4 sessions, so potentially a little bit of a bounce, but there is a lot riding now on NVIDIA's earnings reports tomorrow morning, and they don't have a habit of disappointing. So maybe a little bit of a bounce for tomorrow. But look, if it doesn't come tomorrow, then we have those downside levels to keep in mind.
Okay, we are keeping a very close eye on that and the NVIDIA result. Also watching gold, so a bit of profit taking overnight. Is that what you would call it?
Absolutely, yeah. This is a situation where you cut your winners to pay for your losers, and there's plenty of losers out there in the tech space. We saw Tesla dropping over 8% overnight. It's now 40% below the high it hit back there in December. And when you start to see some of these widely held tech stocks start to fall like that, and something like gold, which has done so well, up 8 weeks in a row, it's also towards the top of this trend channel resistance coming in around 3,000. So probably was a very good reason for people to start to move to the sidelines in gold. So cut the winners to pay for the losers, Nadine.
Got it. Now, when it comes to the Aussie, we've got this monthly consumer inflation data coming up today. However, broadly speaking, we've had US dollar strength. I mean, where to for the Aussie until we get some Chinese stimulus coming through?
Well, we just haven't had the tariffs coming through thick and fast enough to keep the US dollar on the front foot. So you see the bounce now in the Aussie got up to around 64 cents there. And that was largely a result of the robust labour market data and the cautious RBA rate cut. Pushed it up to around 64 cents, combined with the fact that the tariff news has been delayed. We're starting to see more headlines around that coming back into play. So I see the bounce from that 60.87 low in the Aussie as counter trend or corrective. But while it holds above support, and it held this level last night around 63.20ish, then you need to allow this corrective rally to continue. We're still potentially away from that April 1 date, which is when the reviews that Trump signed are completed with regards to trade and tariffs. So potentially there's still a little bit more time to breathe there. And as you mentioned, the monthly CPI indicator comes out today in a short while. And one of the things there is it is just updating 60% of the basket there, and mainly goods. So I don't expect it to play too much of a role in the Aussie dollar at this point of time. But while it stays above that 63.20 level, then just allow for this corrective rally to continue. Below 63.20, then probably we're looking for a push back down towards the downside.
Okay, so what's the resistance to the top side?
So the 200-day moving average sits up around 65.50ish, which is that orange line. So I think, look, it's got potential to get up to that area if we continue to see these tariffs announced pushback, which is possible. But we've just got to be fluid in these types of markets. And I think that's a really good reason to watch these levels. Again, 63.20, the key level for me. And while it remains above there, we can probably see it continue to push just a little bit higher.
Okay, now Bitcoin has been coming under pressure. What are the charts telling us? Because it's not looking that sweet to me.
No, it's not. And look, it was sweet in terms of the price action for Bitcoin. It was almost like a balloon deflating. It just couldn't bounce at all off that trend line support there. And that was really indicative that something was going wrong. And I think we've chatted before and said that potentially some of the tailwinds were turning into some of the tailwinds were turning into headwinds in terms of the fact that the risk sentiment was starting to deteriorate, consumer sentiment was starting to deteriorate. But when you look at what happened in terms of news into the end of last week, the biggest crypto hack of all time. And that appears to have been the little push that Bitcoin needed to get it down below that trend line. And here we are. I think it probably has a look towards that 200-day moving average again, which you'll see there around 81,000. It has to hold that level. And if it doesn't, then we've got probably 2 or 3 lows over the past 3 years in that 75,000 to 65,000 band. We know that that is probably going to be the next area of support. And I think there's been a lot of people come into this market at a very late stage in terms of all the good news which came out after the US election. And they're probably now wondering what comes next. So really important now that it holds that 200-day moving average.
Okay, well, this is the thing, isn't it? Is that you had people buying in at about 100 grand with the thought that it would be going up to 120, 130. So has the fundamental picture changed in your view, using the technicals to guide you?
I think using the technicals and the fundamental, there was so much good news that came out after the US election. Everybody got on board. We had MicroStrategy or strategy buying tons and tons of Bitcoin at the highs there. And it was, there was only so much good news. Potentially got carried away. And we see that in markets all the time. And Bitcoin and crypto, that's really a prime spot to see emotions get carried away. So this is something to be mindful of as well.